peace and love. Welcome back to the Money Universal Growth Network channel. We are here discussing what is going on right now in the market. All right, so when the stock index, for example, the S&P 500 or the Dow Jones Industrial Average or even the NASDAQ sinks over 20% from its recent highs, we enter a bear market. The bear market gets its name from how a bear attacks its prey, swiping its paws down to express the downturn trend of the stock price. It should be noted that the 20% drop is merely a hypothetical measure. As of yet, there is no official definition of a bear market. If an index loses approximately 10% or has been declining in the short term, around 1 to 3 months, this is called a correction, not a bear market. So a lot of us want to know, how long will a bearish market last? Since there is no way to tell exactly when a bear market will end, we can look at previous market patterns to learn more about how bearish markets have behaved in the past. In the past 70 years, we have witnessed 12 bull markets and 11 bear markets. We can tell a bear market lasts for different periods. One can last as long as 2.8 years as it did in 1930, or can be as short as 3 months as in 1988. A bear market usually follows a bull market. History tells us that the upward return in a bull trend tends to be higher than the downward loss in a bear. Think collectively and prospectively. Now, what can be possible causes of a bear market? 1. An economic slowdown, so the Feds can increase the interest rate by 0.75 points. With a strong mind to fight against high inflation. Interest rates increase and high inflation hurts stock market confidence. 2. The pandemic illness. COVID-19, the outbreak across the globe, harmed the economy by restraining consumer demand and increasing the healthcare system burden. 3. Geographic wars. The Russian-Ukraine war in March caused oil prices to soar to a recent high. And 4. Negative sentiment. When investors usually retail see stock prices falling, they tend to worry and are more inclined to sell off their positions to stop losses. This will in turn push the market to fall further. Now, I didn't realize till just this moment that I'm a part of the problem. I'm a part of the reason why the market crashed, because I sold off most of my shares in September, thinking that I would sell them after they dropped slightly. I would sell them and then pick them up on the low end, and ultimately I sold them and never bought them back. So I can see how if a gazillion of us did that, retail investors and traders, we would be in a serious problem. We would be part of the problem. We would be part of the problem. Okay, so now I see my rolling.